On today's episode, we are going to take a look at two stocks that should be in everybody's watch list due to the upcoming holidays and due to the upcoming new game consoles that are coming out. Yes, today's episode is going to be on two gaming stocks, and the gaming industry is one of my favorite markets right now, and it's the one I'm very, very bullish on. Both the businesses we're going to look at right now are going to benefit due to both the holidays and the upcoming consoles, and both of them have actually dropped down compared to their all-time high, so we're going to see if this is a nice buying opportunity for them. Like always, my name's Jose Najarro. By day I'm a senior electrical engineer, but by night I'm a self-taught investor. Been doing this for the past 6-7 years. You should see merch down below if you want one of these cool hoodies or shirts. Like always, if you're new to the channel, make sure to hit the subscribe button and don't forget to hit the thumbs up. It helps the channel out so much and I truly appreciate it. Remember, none of this should be taken as advice, as I am not a professional. And before we go any further, let me know in the comments what are some of your favorite gaming stocks or some of your favorite stocks that are coming up due to the holiday season and the new consoles. I would love to hear others' opinion and love to share with the community. While you're down there, you should also see a link to my Discord channel. It's free to anybody that wants to join. I post my whole portfolio there, and I post every time I buy and sell a stock. If you're interested, like I said, it's free to anybody. And down there, you should also see a link to Webull. If you sign up and follow the rules, we both could get a free stock. Sometimes they do specials where we might get even 2 or 3 stocks. So today's episode is going to be broken down to the following. First, we're going to do a quick overview of each stock. We're going to look at their financial numbers and just their future growth. And at the end, I'm just going to end with my thoughts on the business. All right, so the first company we're going to take a look at is Electronic Arts, EA Games. And before we take a look at some of their charts, I just want to show you what they do and what are some of the big games that they have right now. So EA Games is mainly known for their sports games. So they have like FIFA, they have Madden, they also have UFC, they also have Battlefield, The Sims, which has a crazy following. They have Star Wars. They have released a few Star Wars games, so they have the rights to Star Wars games right now, which is pretty impressive. They also have, one of the biggest things that they're doing right now is EA Play Pro, and this is more of a cloud subscriptions that they have partnered up with Microsoft. So we can see they are hitting multiple markets. They're in the mobile industry, in the console, and also the PC, as well as in the clouding market with strong partnerships. So let's take a look at their charts. So right now, Electronic Arts for the day ended 7% down after reporting earnings. So we're going to take a look at their earnings in a bit. So right now, market cap is about $34.4 billion. Year-to-date returns are only 11%. That's actually pretty low compared to most of the stocks out there. But I do believe that the gaming industry is one that gets missed a lot by investors. And when they start to run, they run a lot. It is down about 18% from its all-time highs right now. So I think it peaked somewhere around 100 and somewhere in the high 140s, and now is sitting at $120. Before we go any further, I wanted to take a quick look at just some technical analysis. As a long-term investor, I don't truly focus on it when entering a position, but when adding into a position, I do look at it into some extent. So first thing I want to mention is I use my volume related to stock price, and I do believe this is one of my favorites and the best indicator to look for support levels. So it shows you at what stock price is the most volume coming in. Right now we can see a heavy chunk of volume in this section right here, somewhere between 110 and 120, where the stock price is sitting right now. We can see that buying portion right here. Then the other portion I'm seeing is at about 100. So I do believe right now we're in one of the first major supports. The next major support would be 110, and the next one after that would be 100. Again, as a long-term investor, I don't buy in and sell out based on any of these technical analysis, but I do like to keep an eye on them. Now let's take a look at their most recent earnings. So on their most recent earnings, which they just did, I think it was this past Thursday, so 2 days ago, Electronic Arts did GAAP earnings per share of 63 cents, which beat expectation by 24 cents. They also did net bookings of 910 million. This did beat guidance, but it was down 30% compared to the same time last year. And one thing I want to say is a lot of people like to compare games like this and companies like this to same time last year. And as a gamer and as a game investor, that's not the best method to do, because it all depends on when games come out. If they didn't release any new games this season compared to same time last season, obviously net bookings are going to be a lot higher. The most important thing to me is to see if they're beating guidance, and they did beat guidance by about $30 million. But it does miss, they did miss expectation, which was what what Wall Street thought they were going to do, by about 50 million. This, I think, is a second driving force for this company being down right now. So some recent news about EA Games: they just extended their UFC fighting game deal till 2030, which is definitely one of the biggest franchise that Electronic Arts does. Quarter 3 mobile game downloads have gone up just overall in the whole market, and Electronic Arts has a lot of IPs, great IPs to be able to enter and have in that mobile aspect. So if the overall gaming downloads have gone up, it definitely has benefited EA Games as well. And EA Game also starts the new subscription, EA Play, which is that clouding platform. It's more like a Netflix type. It's more like a Netflix type for video games, and they're partnering up with Xbox as well, which I think is going to be a great move for them. EA Play now has about 6.5 million paid subscribers. Another thing that I do believe is driving this stock price right now is the company gave us a holiday outlook for the upcoming quarter 3. It's guided about $2.35 billion in net bookings versus the overall expectations that Wall Street had, which was $2.39 billion. So about $40 million less than what was expected. I do believe EA Games is being a bit conservative right now. They're also saying earnings per share is about 61 cents versus the overall consensus of $3. And this to me is probably one of the scariest things, and one of another major reason driving that stock price down. The company did announce new $2.6 billion in buyback program, so they are still buying back their shares, and they initiated a dividend. This is the first time EA Games has now done dividends, and they're about to start paying $17 a share. So again, usually when companies start paying back dividend, it kind of tells you that, hey, we can't use all this money that we're making to grow anymore. We'll rather give back some to the investors. And again, this kind of gives more of a this is no longer a growth story for EA Games since they can't do this. But sometimes they just have too much cash available to them that this is the only thing they can do. So it's a good and a bad. So let me know if you are EA game holder right now, EA stockholder. Let me know, what are your thoughts on this dividend. Next, I just want to show you guys net bookings. So net bookings, like I said, I think it's more important to look at it based on the full year than full quarters. We can see net bookings continue to increase year after year. And for the fiscal year of 21, they're estimated to be a lot higher than the previous years. Same with operating cash flow. Cash flow is continuing to come up. And we can see a big portion of the revenue is now coming from live services and others. These are like subscriptions, like packs. They make only about, I want to say 1/3, maybe a little bit less, maybe 1/4 comes from full games. And here we have some of the major net bookings from live services. We can see FIFA Ultimate Team is one of their biggest net bookings when it comes from live services. Then we also have The Sims and Madden and Apex as well. All these four are their biggest drivers for the live services. And these are four that they continue to have, right? Madden and FIFA and Sims are like the bread and butter for EA right now and EA Sports. And Apex is the one that they just released a few years ago, and it's doing pretty well. We can see this continuing growth on Apex live services. Next, I wanted to take a quick look at their balance sheets. They have about $6 billion in cash compared to the beginning of their fiscal years, which was about 6 months ago. They had about I want to say $300 million less. So there's a nice improvement in cash right now. Total liabilities have decreased compared to the same time last year. Their senior notes, they only have senior notes of about $397 million, and they have senior notes current of about $600. So close to $1 billion in debt, but they have about $6 billion in cash. This is definitely a great balance sheet. Now, if we take a look at growth, EA Games is expected to grow 5.8% annually on average for the next 3 to 5 years. This is considered a slow growth stock. I wouldn't even consider it a growth stock based on these numbers, but I'm still very bullish in the overall gaming industry due to the mobile platform that things are moving and the subscription base that things are moving. So One thing we are seeing is, yes, revenue is growing slow, but look at that type of earnings growth that is expected to see. Next, I want to show you guys revenue growth. We have seen a decent revenue for EA games, but look, this company is also has very strong gross margins, high 60, sometimes even 80%, and has been profitable for the past X amount of years already, and with strong profitability of about 20%. Next, if we take a look at their cash flow, as revenue continues to go up, their cash flow from operations go up. Operating cash flow margins are as high as 30% now. Same with free cash flow margins. And this is just telling me, right, as they're moving more into the subscription-based platforms and digital market, obviously their margins are increasing. EA Games is definitely one to keep on the watch list. The second stock we're going to take a look at is Activision. But before we go any further, guys, you should also see a link down there below for 7investing.com, where every month they recommend 7 stocks for $17 a month. And if you use my link or promo code Jose, Jose, you get $10 off your first month. May I say, yes, this is an affiliate program, but I use their services and would recommend it to anyone. All right, so the second stock we're taking a look at is Activision, and Activision owns 3 major departments. They own Activision, which the biggest game there is Call of Duty. Call of Duty is coming out later when the new consoles are coming out, and they also have this free version with kind of premium pay to play packages. Then they have Blizzard. The biggest things here are World of Warcraft, Hearthstone, and Overwatch. StarCraft as well, and Warcraft. Then we have King. King is Candy Crush, one of like the biggest games in the whole mobile industry right now. So if we take a look at Activision right now, was down about 1.6%. I do believe it was probably a bit of a drag due to EA's earnings. They have a market cap of about $60.9 billion, a bit bigger than EA Games. And they also are down about, they have year-to-date returns of about 34%. So the returns are a lot stronger than EA Games. And it's down about 9% from its all-time highs right now. So it does seem like EA Games has taken a bigger beating than Activision. So let's take a quick look at just some metrics fundamentally. We can see here, these are my 3 biggest support levels for Activision's. Right now would be around $78, $79. Pretty similar to where the stock price is at right now. We can see this huge volume of price happening in this area. The second would be somewhere around 73, 74. We can see another step up here. And after that, my next support is about 60. And we can see this around here. So again, I'm not going to use this to, I don't use these to trade, but if I want to add into a position, and especially for entry positions, I don't use much technical analysis, but when adding into a position, I don't mind seeing that they're not too far back extended. Both EA and Activision have not been extended dramatically, and they've actually pulled back to, in my opinion, reasonable levels. So let's take a look at their recent earnings. So Activision's Q3 non-GAAP earnings per share were 71 cents, which beat expectations by 6 cents. GAAP earnings per share were 78 cents, which beat expectations by 16 cents. So they are profitable, very similar to EA Games. Revenue of 1.77 billion. This is up 46% compared to the same time last year, and it beat by 70 million. Q3 overall monthly active users were 390 million this quarter. That's a huge number, but last quarter they were 428 million. Obviously, last quarter we were a little bit more impacted due to COVID situation, so a lot of people were at home. It would make sense to see a decrease in monthly active users for this quarter when things started to open back up. But I do believe as users were there last quarter, it kind of got them back into Activision or into all their games from Blizzard to Candy Crush, that they were able to grab more customers in the long term of things and keep some of their old customers as well. For the quarter, they are giving bookings of about $2.73 billion, and this is way above the consensus. The consensus was $2.58 billion, and earnings per share of about $1.09, way above, above consensus, which was $1.08. Operating cash flow did slip down about 37% down compared to the same time last year. They still have a nice amount of cash flow coming in at 196 million, and this is well below the expectation. Free cash flow also fell by similar levels and is down. It's still profitable at $172 million. So some big news about Activision. We can see Activision is divided into 3 parts: Activision, Blizzard, and King. The one that makes the most money for them is Activision, which makes $345 million in operating income. It's also the one with the biggest sales, and they're doing amazing right now with the whole Call of Duty franchise and Call of Duty Warzone. Then we have Blizzard making the smallest in revenue and the smallest operating margins as well. And then we have King with the strongest operating margins of 46% and semi-strong net revenues. Some upcoming news for Activision is Call of Duty Cold War is coming up November 13th, right when the new consoles are coming out. The Call of Duty Mobile is still one of the strongest levels, and they're kind of pushing it. It's in the final testings to be pushed out in China, where over 50 million players have already pre-registered to date. They have the leagues for both Call of Duty and Overwatch, which are breaking levels, so the esports market is still kicking in. World of Warcraft has the new expansion coming out this November 23rd. Hearthstone has increased hours played Q3 compared to the same time last year, and a new expansion is coming out. And they're also moving a Diablo game to the mobile platform. So it is they have a lot of things in their roadmap right now. Balance sheet for Activision is actually pretty strong. If we take a look at this year, they have about $7.6 billion of cash and $3.6 billion of debt, which gives them about $4 billion of cash available to them. Very good to see that. Nothing I worry, especially since they're profitable already and they have positive cash flow. Next, I wanted to take a look at the revenue growth. Again, very slow growth, similar to EA Games. And I do believe this is something that's deterring investors to invest in gaming companies like this, but not maybe the revenues are not growing as fast, but the overall industry that they're moving to is becoming better in profit margins and gross margins. So we're seeing an improvements in earnings, and we can see this here, right? Gross margins for EA Activisions have improved, very similar to EA Games, and their profits have increased as well. So they're selling more outside of their full games. They're selling it more in subscriptions, in loot boxes, and all these other products. Revenue growth for Activision is not as strong as EA Games. We can see there have been some downturns, but again, this is something as a gaming investor, one should understand is Activision sold a few portions of their games a few years back, which caused this decrease in revenue. They sold Destiny back to Bungie, I believe, or Xbox. So Destiny used to be part of Activision for some time. Next, I want to show you guys their cash flow operations. We can see similar story as EA Games. As cash flow from operation increases, so is their revenue, and margins are almost as high as 30% for both operating cash flow margins and free cash flow margins. All right, so now I just want to give my thoughts. Overall, I think both Activision and EA Games are great. I have them in my portfolio right now. And like I said, I'm very big into the gaming industry. Both Activision and EA Games have very strong IP. They have, for example, Activision, we saw they had the World of Warcraft. They have Call of Duty. Call of Duty is going to be amazing right now, especially with the release of the new gaming consoles as well. And the movement to mobile industries we see with Diablo and their Call of Duty Mobile, it just continues to show how they're trying to just focus on their overall style, on their overall main IP. EA, very similar. They're focused on their sportings. They're focusing on Star Wars right now and The Sims, as well as Apex. Very similar. They're moving into the subscription. They have that Game Pass working with Xbox. So they're both making strong moves. They both have strong cash flow right now. Positive in cash flow, positive earnings. Revenue growth is not the best compared to many of the other stocks we see, but they are both paying at least somewhat of a dividend. So it's if one is doesn't mind being a game investor and also collect some dividend, ATVI and EA are helping investors in both those ways. If we take a look at forward PE ratio right now, after that drop, EA seems a bit cheaper than Activision. Forward PE ratio for EA Games is sitting at about 20 for the end of 2021. For Activision is about 22.53, so about 2 higher. The only thing I can see is Activision is probably going to do a lot stronger. Their Call of Duty is the biggest franchise out there. It's one of the best performers. Candy Crush is also amazing in the mobile industry, and World of Warcraft with their new expansion. You just can't beat the strength of Activision's, but EA Games with their FIFA, the type of games that they just keep reoccurring and re-releasing, right? Every year they have a new Madden, a new FIFA. Just that alone, that strong IPs that they have will continue to drive positive cash flow for EA. I enjoy both of them. If I was to buy any of them, I think at the moment I would prefer ATVI, Activision, even if it's a bit more expensive than EA. But both of them have pulled back. If I was to add, I wouldn't mind adding into either. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up. It helps the channel out so much. Take care and have a good night.